you can see my chart right now. Very, very important. Before we start, everybody can understand the risk disclosure. Please take a second to read this, be familiar with what it says. It is very, very important. It's not just something we put, it's something very serious. So you guys can see this is the disclaimer. All right. And everybody that put a 1 can obviously understand the fact that they have seen this disclaimer and they abide by understanding. I am not a financial advisor. I am not a tax advisor. I am simply another human on the face of the planet that just wants to talk about the charts because I'm passionate. Everyone all good? We understand that? All right, let's get started. All right. So without further ado, we're going to do a little small recap for anybody that wasn't here last time. What are we likely going to be talking about? PD array matrix. When I get the text box out, it's going to be a good session. So shout out to you too. Love you a lot. So we're going to talk about the PD array matrix. About market maker models. We're talking about stages of MMXM. Talk about order pairing. What else we want to talk about? Talk about some time. Give me some other things. What do you guys want to hear about? Fractal consolidations and deviations. Sure. What else? Open mic time. What are we cooking? Well, Fiq, it is being recorded. It does take some time to process it, so I do appreciate you being here. If you're able to be present in the moment, that's going to be the best for your learning. So, anybody else? All you gotta do is put something in the chat that you want to learn about today that has to do about things that you think that I would probably be able to help you out with. What's an original consolidation? Times 2 for the pun right there, just for 2. What else? Razzle dazzle, shake and bake, Ricky Bobby. You actually want to see a little bit about that? Well, I can definitely do a little bit more of that. Shake and bake, Ricky Bobby. OCD, sorry. All right, what else? What are we talking? Anybody else? Someone put in macros there. How many people are just going to be like, oh, just tell me what you want to learn about, and I'll just talk about it? Not a lot of people are going to do this, so let's get a couple more points in here. So we'll do some speed runs. SMT daily opening range. If you're talking about 30 seconds, what are you talking about over here, Wafiq? Just give me some clarity, please, before I even write this down. No, we're not going to talk about that right now. That's not in mind of the discussion as of right now. Much love, though. All right. Going once, going twice. You have 30 seconds. Anybody that wants to write something before we get started? Chelsea. Very transparently, I've never looked at in this type of way. I've literally only looked at it like this. But after seeing this, I'm all right. I really want to write that too. So, and for anybody that's not familiar with what that is, we'll go into it. So, shout out to you, Segs. I hope all is well. I don't trade CRT, Jasper, so you're gonna have to go to someone else for that. Sorry. True and fake change state delivery. You're gonna better be more or less listening to T-Trades on anything to do with change of state delivery than me, but I will try my best. I think that's good enough for right now. So, all right. Again, this is meant to be very interactive. If we're not being interactive, it's going to be a shorter stream. So I'm just letting you guys know right now. Please be interactive. First things first, premium discount array matrix. Drop a 1 in the chat if you know about the premium array matrix. And with your 1, please write out the premium to discount array matrix. You only have to do one side, but specify which side you're going to be talking about. If you drop a 2 in the chat, that means you don't know what it is. So you should look at the chat into other people answering the questions. And I'm sure that someone in here that is a very studious individual that'd be able to find the actual screenshot from the ICT teachings, because I don't claim to do this by myself. This is the knowledge and inspiration from the man himself, ICT. So awesome. Anybody familiar? Anybody that wants XP? Because we will be giving out XP for those that are interactive in this discussion. HINDSIGHT, that means that you're going to be looking at the chat to see what other people write and to verify them with your own knowledge. So if you don't know the knowledge and or you don't know the source, we will talk about it as well. But I don't want to just give away the answers here just because people want to hear eye candy. If you don't have this memorized, it's because you're not having the best view on price already. I could already tell you that based off of this and looking at this fractal right here, this and this fractal right here, we could have a whole entire discussion. So it's algo. Shout out to you. Much love. Shout out to you. So what we're going to do, for anybody that's not with us, just going to share it. This is from ICT. I did not make this. Drop a 1 in the chat. Please pay attention. Drop a 1 in the chat if you've never heard about a PD array. Shout out to you. Or I want to give you XP. That's fire. Shout out to you. So important to know that stuff. Again, Old high, old low, rejection block, bearish order block, fair value gap, liquidity void, breaker, mitigation block. Literally, like on a note card, you guys should definitely be writing this out. Even if you don't use it, you just understand where you are in price. That's critical. So the people that put a 1 in the chat don't know what PD array is. All this is, and again, we're just going to make this larger, right? All this is set definitions of specific characteristics of price, right? And what is created within price, within an OHLC, to define basically where you are in a dealing range, or define what it is your preferred entry technique and or level is likely to be. Drop a 1 if that's clear. So awesome. So all this is basically definitions for how we can all be on the same page to talk about price together. That's all it is. So that's the reason why we start off by it. So let's just give a quick rundown. Again, we're just going to take a look at this fractal right now. So based off of everything you see right here, I want everybody to look and start to create their own charts. Again, go onto the NASDAQ. If you don't have a 15-second, go onto a 1 minute, doesn't matter. And start off on the time of 11:33 to 11:55 to 12:15. And just look at this one sample of price action. And then look to annotate each of these. And I'm going to start to do it slowly so you guys can also see what my mind is thinking. We have the highest high of the original consolidation that's here. The highest up candle bodies close within the original consolidation occurs right here. Everybody traditionally knows an old high. I'll repeat what it is again for the rejection block for anybody that missed it. I'm looking at the highest up closed body that's inside of this red box. That's this closing price right here. After the rejection block, what do we have? A bearish order block. Well, would you look at that? Your high probability, anybody that's not taking notes, your high probability bearish order blocks will look to be coupled from a rejection block that has produced a response away from it or fails to reach it. So what do we have here? Bearish order block. Let's go like this. I think that's going to be cool. What can anybody tell me after we have bearish order block? What do we have? So irrespective of color for the rejection block, I'm talking about, again, for a bearish rejection block, you want to be looking at the highest up candle body close. So fair value gap, shout out to you guys. So that put the answer there. So anybody here after the bearish order block looks to validate with a propulsion block. Can anybody tell me what a propulsion block is? Drop a 1 if you don't know in the chat what a propulsion block is, and pay attention to the chat because people are typing. Looks like a couple people don't know what a propulsion block is. Who wants to get XP? An order block that trades back into a previous order block. You are absolutely correct. So it's basically a consecutive order block, right? So if we're annotating this right here, I'm gonna make this really much darker. This is what we're annotating as a bearish order block, right? The candle, right, that looks to engage within this bearish order block and produces a subsequent change of state of delivery, right? That's going to be seen as your propulsion block. There's going to be a couple of examples, obviously, that you can annotate. And again, nobody's perfect here. You can annotate a different order block. You can annotate this one. You can annotate whatever you want. So this specific order block right here is the way that I would personally be viewing a propulsion block. In your notes, as you guys also see, a propulsion order block mean threshold should not be violated. And anybody that can just zoom in and see this, the candle bodies pretty much stop right at 50%. So we're pretty calibrated there. So what I just said there is also very important. Understanding where you are and how you're calibrated to your time frames is critical. So old high, rejection block, bearish order block. Is everybody following me right now? Fire. How do you determine whether to annotate a single up-close candle or the lowest of the consecutive up-close candles? That's your own experience. We're not going to get into specific details because that is a specific question. And that's where your own experience is going to come in. And you're going to have a lot more sample sizes that you can understand it. So T-Trades, again, he uses a consecutive candle. For this, we're just annotating PD arrays, which is why I'm just using a single candle. So the moment I have a propulsion block set, what do I want to see happen? A propulsion block is going to be to the parent order block right here is going to be very influential, because if we don't produce any kind of speed or response from the propulsion order block, that's my first sign that I'm looking at this incorrectly. Does everybody understand what I just said? If I know that a propulsion block is going to produce an expansion away from the original order block, that means that that expansion away or displacement needs to be coming in form of only two things: a fair value gap or a liquidity void. Does that make sense? So that means, what do you know? You have a fair value gap and a liquidity void. People are going to be like, why'd you draw it like that? I'll get there. From this low to this high, to this low, to this high, to this low breaking, this is all a balanced price range to me. So that means I don't want to see 50% of this original consolidation broken. Well, would you look at that? 50%, that's what actually produced the reaction lower. We'll get into that. So here, liquidity void, because you know that it's a series of fair value gaps on a higher time frame. This, to me, from this low here to this high to this low breaking to the nearest low after, let's zoom in because I know some people have harder eyes. And you guys are like, why is he zoomed in so much on a 15-second chart? It does not matter. This is a daily chart. It does not matter. So get that out of your head immediately. Price is fractal. So we have original consolidation. Price breaks lower here. This low to this candle's high is actually the point in which there's inefficient price delivery. Drop a 1 if that's confusing. Not a lot of 1s. That's good. Why is it not inefficient from here until here is, again, because we've already worked all of the orders inside of this trading range. So that means if we are going to continue bearish, and again, for you guys that's paying attention, that you want to have bearish order flow signature that Josh looks for. Once we break a low, if we break the low and then this candle's high and the midpoint of that is respected, am I going to be looking at any bullish signature? No. Why is that? Well, first of all, we didn't come back to either invert any inverse fair value gap. We have not taken out any additional liquidity from the initial low because this is basically your low. So if I'm looking for offset accumulation for anybody that was in the previous one, this has to be the first trigger. So immediately for me, before I even consider long, this candle has to happen based off of this price structure. So that means that this area right here is something that I use to monitor order flow. It is not something I use for an entry. Why is this not something I use for an entry? Is because if I'm going over here and I'm going to sell short here, you got to be really, really, really confident that price is not going to even just fill up here and or wick into here before going lower. This is where aggression and experience and monitoring live price is going to be becoming useful. So we just discussed the liquidity void and the fair value gap. We respect 50% here. Let's go back to our PD array matrix. After the liquidity void and the fair value gap has already been established, we're looking at a bearish breaker or a bearish mitigation block. Does price go back into this candle right here? Do we want it to go back into this candle? Let me rephrase that. Do we want price to return back to this candle? Do we want price to return back into this candle? No, we don't. If price wants to remain heavy, that means that this candle here, which is the lowest down close before the new lower high, this is going to be seen as a mitigation block. What you're going to notice, again, is if we don't return back to a mitigation or a breaker, you just have a heavier delivery. That's where people like to get in on a unicorn and then it just goes, right? So in this example, I'm going to take out the high and I'm going to just do a basic understanding, basic understanding for just a simple measured move. So if I have this consolidation from high to low, and all I'm doing is taking the 50% and moving it here, right? It's just a lazy way for me to do the deviations because my deviations aren't set right now. But if you do the one deviation, it's going to do the same thing. So point being is that from here to here, I know that this is minimum where I'm going to be looking for in terms of a real operating dealing range. And when we had the conversations last time, you guys saw that I did basically some targeting where I was qualifying price legs between basically a dealing range of 30 points on NASDAQ. 30 points on NASDAQ happens very quickly, especially on the lower time frames, which is just something I like to look and engage at. It was a metric used for the Forex markets back when I was learning from ICT, and something that's just always stuck with me. So if you're wondering where the 30 comes from, that's where it is. 10, 20, 30 pips above an old high and old low. Okay. Once we go lower than 30 pips below or above 30 pips a high, then generally speaking, that's going to be a larger price run and not just a turtle soup. So if you haven't heard, that should be a gem for you. So we're here, old high, old low, rejection block, bearish order block, fair value gap, liquidity void. We just talked about how a bearish breaker, in this instance, when you have a balanced price range, this is not mitigation block or a breaker from any of these legs that I want to see get traded back into, because this is the order flow signature that I'm monitoring. Drop a 1 if that makes sense. Makes sense to Jesse. Makes sense to a couple other people as well. If anybody has questions based on how I just dissected the PD array matrix, please let me know right now, or else we literally cannot continue. So please ask questions, otherwise we can't continue. If there's no questions, I'll give it 30 seconds, take a sip of water, and I'll monitor the chat. So it looks like we got a lot of ones in the chat. Looks like we're ready to move forward soon, but I just want to give everybody else the ample time they need to just finish typing, because their question may be longer than 15 to 20 seconds. I know mine originally, when I would have been first asking anybody questions, because in brutal honesty, ICT was very, very busy during the whole learning experience, and I didn't really get to ask him a lot of questions. So in a bullish run, you'd want to see the lowest candle to be a down close, right? Even if the up close took the low. So I don't necessarily have a requirement in where I want to see the up close candles or down close candles engineered, and whether or not this was an up close candle or this was a down close candle in this whole original consolidation. I would still view this whole P array matrix very similarly. The only difference would be the rejection block, because that's the only definition that I basically want to see, to say that in my current dealing range of price, I want to see the highest up close candle for a rejection block that's bearish and a lowest down close candle for a rejection block that's bullish. So hopefully that answers your question. How do you determine the range that you pick from the previous high and low pink box that we're dissecting? So all I did is just pulled up the chart from basically what we were looking at from the same exact template that I had on like the original whole recording that we had the first time. And I went over, and again, I don't want to just spoil this right now because I want to make sure if anyone's paying attention, but how did I pick an original consolidation? And we're going to go into answering number 8 by just getting into that question here. So anybody that was on the first stream, how do I locate an original consolidation utilizing the Fractal Consolidations Pro Plus? Because you will be able to answer in Mike's question. Overlap. Shout out to you, Abdul. You're getting some XP. So Abdul got the answer right. It's an overlap of consolidation. So if I take everything off, right, you see how there's a larger box here, there's a smaller box within there, and then there's also another smaller box here. And I went over the settings previously, which you can go and see right here. I'm just looking at an intraday view of the Fractal Consolidations on the 3-minute basis with the filter off. So when I see overlap of consolidations, that tells me that this is basically a larger filter consolidation. So when I see the overlapped Fractal Consolidations with this tool, that's what gives me a starting point or an origin of when I can look at price. So if let's just zoom out right here, it's going to show you a pretty easy understanding, right? So it's like, no. Is there an overlap here? Yes. Do we expand away? Yes. Is there an order block at the EQ? Do we respond to that order block? Is there a day delivery here? Is there really any produced response from a fair value gap? No. So liquidity, engaged. Lower low, come back down. Do we break to this low? No. What do? Rejection block, because as we discussed from last time, and again, I know a lot of people are already asking me to zoom in. This took out this low. So that means that the liquidity based off of this rejection block, I want to make sure that this candle basically holds if we're still in a buy program. Basically I have it signature just breaking order flow. We have order pairing right here, and then price starts to look to move, right? So 2 breaks of the consolidation, that means we're looking to run pending liquidity. So just as a small fancy way of just telling you this, for original consolidations, you want to find when they overlap, right? So if this overlaps, there's a larger consolidation from here to here, 50%, the order block up, would you look at that? Right here, go down, is there an order block that originates at the 50%? This candle over here took liquidity. Is there a subsequent propulsion block that gets formed? No. So do they raid liquidity? Yes. This liquidity was rated here. So I'm looking at this. I'm constantly doing this. Every time you guys stand this, every time I see lower lows, I'm constantly going back to the other low and I'm watching the rejection block there, because that's going to produce that engineering of liquidity that if we do go down lower, that's going to be that first pausing point. We deviate from here. There's order pairing on both sides, last accumulation. This is where there's a new lower low, and now they're just engineering liquidity. This is just, again, this is where I would take a loss personally. I would take a loss here, and then I'd look to get back in on the sell model based off of this. Because once these lows start to stack up, like let's just show it like this. Once all these lows get stacked up and I start using them a bunch of times, after And again, if anyone's taking notes, after I see 3 high resistance liquidity run signatures below me, if we start breaking any of these, you see how this is breaking? This is still a warning sign to me. So it's the same thing here. The moment I start having a lot of these high resistance lows, and all that means is, again, for anybody that's not paying attention and or understand this. So when I'm looking at liquidity, and this low right here is the liquidity that I'm looking at, right? Once they have a lower low here, this rejection block is basically what I'm monitoring for order flow. Because in reality, if we're gonna go here, right, well, think about the engineering of a price leg, right? Here, you have a swing here. If they start going below this swing, then your structure for the swing already starts to diminish, right? So I want to say a great deal of off-topicness from based off of a little bit of the conversation, but someone tried to ask me, that's like the ADHD brain, but it's like, how do you define original consolidation? Well, I want to see the overlap. So the overlap in original consolidation, that's when I know where to start. So I'm going to basically just say overlap of original consolidations or higher time frame fractal consolidation hour plus. And again, for everybody to fully be on the same page, I only like seeing the filtered on for the fractal consolidation tool for an hour above. I don't like seeing it before because I like to see the actual breaks of order flow. And that is dependent on the closing basis of a candle. So annotated and discussed fractal nature of price action. Don't complain to me about the 15-second chart. I love you still. Market maker models. Here we go. Who wants to get some XP? Hopefully everybody. Getting XP is really cool. You get to give tools to your friends and unlock XP tools. All right. So stages of a market maker model. If it's not already clear, original consolidation, redistribution here. Why is this not detected from our fractal consolidation? Because it's just aggressive. It's not consolidation. This is a trend. This is a consolidation. Fractal consolidation break. Lower low. Do we break the high? This is where we go into basically saying, I want to see the breaker. I want to see redistributed orders that from the sell side of the curve look to engage with new buying opportunity. Order block placed in a previous range of redistribution, and price uses that to accumulate higher. Stop raid. Use the wick. Still reaccumulates. Reclaim bullish order block. Comes back up into the balanced price range that we talked about. You guys see these dotted lines on the fractal consolidation? That is the equilibrium. Bang. Fractal nature of price. You want to see a bearish order block at or originating from that equilibrium. That's here. Propulsion block is here. Do you see a response? Yes. There's a fair value gap you can get into. Yes, it overshoots it. You're on the seconds time frame. Your stop would still be above this high if you're using the fair value gap entry technique, so you'll still be okay. Not financial advice. And then we have all this sell side that's here. Gets swept. And where do you go? Pretty much the range of here. Overlapping consolidation. Look at the equilibrium. Bink. So stages. Original consolidation, redistribution, smart money reversal. Look at this. Why would I choose this rejection block and not this one? Look at the close. So this rejection block, low risk buy, comes up. This is stage 1. This is your first raid. Price expands higher. You have your breaker, low, high, lower low, higher high, reaccumulates. Liquidity, midpoint, premium, reaccumulation for stage 1. Match up orders here. And that was one side of the curve. So we have our sell side, should go like that. We got buy side. This is pretty much a recap of what last recording was. Drop a 1 if we're still with this. Does it feel like more natural that it went like we went over it this time than last time? Because I always thought that that was a really cool learning experience from everybody. Even though it literally doesn't matter anything. It's just how humans are. It's like you do something once, it's the hardest thing possible, and then do it again, and it's just like, oh dang, it is what it is. So hopefully this is a better illustration for what you guys are understanding about PRA matrix, fractal nature of price action, market maker models, stages of the market maker model. You have the sell side of the curve, you have the buy side of the curve, and we can get into basically the sell side here on a larger market maker sell model. So the reason why this specific fractal of nature of price is really, really, I want to call it special, is because you basically have 2 specific market maker models that are here. So on a basis, you have this market maker model here, You have another one here, but then you have the larger sell model that is encompassed from the previous 2 buy models. So once you start to see how they blend and incorporate, that's going to be really, really fascinating, because when we got into the discussion of seeing the lower time frame fractal market maker model that's in stage 1 that produces a higher run or lower run based off of the fractal nature price of the curve, then you'll start to see your eye is going to want to be going here, right? Remember we talked about vertical accumulation, when you literally press the button, it will not go the other way because you're not on the right side. If you do, that's your entry that everybody and their mothers wants to be able to have. This is exactly what it is right here. So this is, again, for someone that is very sophisticated on the market maker model section of price action. And again, I'm still a infant in my whole entire world of things. This is where everybody were to say, hey, listen, if I were to do one thing in the market and I really want to be able to do one thing, I just want to be able to press the button, it instantly goes my way, and it never has a, let's say, move away. And these are the type of areas where, again, if you were to look back at the previous recording, I had it right here actually, and we start to do these dots here, right? So drop a 1 if this is familiar, because a lot of people would be like, why is he just cherry picking this point right here? I literally have breaking down the engineering of how this specific entry pans out. So when you say this is impossible or this entry doesn't exist or nobody takes it, I've literally have breaking down the entry. Do I take this entry and don't miss 100% of the time? Absolutely not. I'm a human. But this is what I personally believe everybody and their mothers wants to know. So that's why we talk about it. All right. Details provided. Stages talked about. And just because everyone's going to be like, it's not right, they want to take a screenshot, that's fine. So basically you have your original consolidation, stage 1 redistribution, smart money reversal, low risk buy. This is where you can say that your low risk buy and your stage 1 could materialize. And this is where, again, market maker models, I'm not saying I have the full formula and everyone wants to just follow Josh, because that's not accurate and that should not be what it is, right? This could be seen as stage 1 with the low risk buy inside of it, and this also be seen as stage 2. So this is where your own experience is going to drive you, and you're going to be like, well, Josh, why is this one this? And again, it has a generic model, right? The generic model is this. We talked about this last time too. So again, if you have not marked this out, then you need to be familiar with this. And when you say, is there an indicator on MMXM? That's the reason why this indicator is on my chart. So original consolidation, redistribution stage 1, redistribution stage 2, smart money reversal, low risk buy, stage 1, reaccumulation, stage 2. So I like to put this a little bit lighter, and then like to put this also a little bit lighter so that you can see the difference. Much love too, I appreciate you. All right, so when we talk about, again, the stages of each of them, that's what a lot of what we talked about in the first recording is. So just as a general, again, heads up, when someone asks me, hey Josh, can you talk to me about market maker models? Now they'll be able to watch the first one and the second one, and will just basically see how I see price. So stages of market maker models, we talked about that. If you have any questions about the stages of a specific market maker model, please ask them now. Bueller. For anybody who knows where that the Bueller stuff comes from, that's like a whole nother joke. But if there's not 25 hearts on that specific comment from 2, I might as well end the stream right here, because you guys don't know the power of what we're even talking about there. There's going to be leaked course material if he does that. I know everyone's like, dang, Josh, why are you giving away this stuff? It's all public. It's not like I'm hiding anything. ICT, literally, this is all on his YouTube channel, so it's awesome. But anyways, please drop some questions, though, again. And literally, I really do mean it. If there's not 25 likes on that, I just will say that this is a pretty good review, and we'll just schedule another one. But Eve, we're going to be talking about time shortly. That's definitely coming up. And see how all this works into play. So we have order pairing coming up next, and we have time coming up next. But we're taking a small break until 2 has 25 hearts minimum on his message. And take another water break. All right. It's important that you guys stay hydrated again. If you're not drinking water at your desk and or standing up periodically, we can just all stand up right now. I don't know how long I've been going. Let's see how long it's been going. It's been 39 minutes. So just stand up for 30 seconds. Put your hands out in front. Have a nice stretch. And you'll be like, dang, Josh, I didn't learn anything, but I got a nice stretch. And I'd be like, good for you. I'm just messing around. Now, but I like to stretch. It's really, really important. My back cracks easily too, so to just get up and get loose as well. Especially when we're about to talk about something really, really important. So everybody got a chance to get up, stretch, drop a 1 if you actually got up, drop a 2 if you're still sitting down. I really hope I don't see any 2s, because just get up for 25 seconds, even if you're in a freaking position, which you shouldn't be if you're on a live stream trying to learn, but just get up and just put your hands up in the air and just stretch. It feels so good. But anyways, I think we're ready to continue. All right. I guess this is the good stuff, to say the least. This is where everybody and their mothers wants to have a conversation. This is where the new stuff happens, right? So we're going to talk about order pairing. I'm going to remove a lot of this stuff here, and we're just going to talk. Before I even get into order pairing on the chart, let's just talk about the theory first. It's very important. Any candles, and again, if you're really not taking notes right now, I don't know what to tell you. This is the time where you want to be able to extra make sure that you're paying attention. So basically, the original consolidation equilibrium, we're going to see a move away from that. The moment we see a move away from that, if we have a stop rate at or near the equilibrium, this is going to be very important to me. Why would this potentially be important to me? Someone try to talk to me. Why would this be important? Why would I even talk about starting with this idea? Because again, if we're not going to be interactive, I really want everyone to be paying attention. Because there's 5 to 7 people that are really engaged, but there's almost 100 people in here. So if you guys aren't willing to pay attention and or be interactive, then you're just stunting your own potential learning. So why would I talk about a stop rate originating at the equilibrium of an original consolidation before we even get started about order pairing? I really mean it. It's important. If you guys aren't typing or at least trying, stop trying to always be right. This is the thing too. You could be like, Josh, what you're about to say right now is not right. All right, let's have a discussion. That's the whole point of it, right? Range is rebalanced is an answer that was given. Balance the market. People are saying rejection block because that's where a trend can originate. Premium to discount. That's you want to see a rejection block form. Market makers need liquidity to take it down. It's very interesting because not a single person actually got what I was trying to say here. And it was actually a review from what we talked about last time, because once we have a stop rate that's at or near the equilibrium of an original consolidation to a market maker buy model, this is when a fractal market maker sell model can instill. So if anybody remembers me drawing a curve like this in light red, drop a 1 in the chat. So these are the things that, again, you'll see. I'm not going to change my answer. I'm not going to start to say stuff. But again, I'm giving you guys this discussion so that you can see that it's just a review of what's been previously said. So why is this important that I'm going to see right here? Because this is going to tell me basically how strong and aggressive the move is going to be on the sell side of the curve. Whether or not I'm going to have 1 stage or 2 stage, or look to do my own grading of a deviation and or a liquidity range of opportunity targeting. So I know that was a mouthful, but basically all I'm trying to say is that if we don't raid an old high at or near the equilibrium of an original consolidation, then I can't really be that confident that we're going to see this specific fractal nature of the aggressive nature of price, because that means that you have the sell side of the curve here from a smaller intraday market maker sell model sell side. But then we're also on here, which is basically, again, the sell side of a market maker buy model. So drop a 1 if this makes sense now. So if someone asks me now in the future, why do I want to see a stop rate at or near the equilibrium? I'm going to tell you it has to do with the fractal nature of the curve of price, as well as when I have high resistance liquidity run signatures above me to protect short positions. So what I said there is very, very important, because remember I mentioned to you guys, if I see higher high signatures here, this is going to give me more confidence to place my stop above them because stop rates already have happened. So we talked about the fractal nature of price here. And why this is important, again, is because the stage 1 and stage 2, and when we talked about order pairing, because I know some people think I forgot about the discussion already, I didn't. Talked about order pairing, but order pairing as it relates to one side of the curve or not depends on whether or not you have a fractal curve in play. If you do not write that down, you're not paying attention, because then you're going to be like, dang, I just drew order pairing. I wanted to see order pairing, but it just blew past it. I'm going to be like, all right, well, you didn't pay attention to stage 1 or step 1. Hopefully I was insightful to you guys, because it really should be. Okay, so let's continue. Consolidation at EQ followed by a higher low rate indicate a perpetuation to, that's a lot of mouthful, but that's sure, definitely. All right, exactly what to, because again, this is really important because what I'm illustrating here is to say is that the orders that were distributed in previous redistributions, if you have a fractal nature of the curve, they're not going to want to look to specifically return back to those arrays before they start engaging in the next distribution. And again, fancy way of saying it, if you hit a short here, it's just going to keep going lower until this liquidity target is met, which means that this again right here is indeed what everybody and their mothers want to see, which again is this. Someone has a question right here that says, to be honest, I didn't catch what you mean. Sorry, language barrier maybe. So there might not be a fractal MMXM inside of the initial MMXM, right? Yes, that's exactly what I'm saying. And all I'm saying is that the telltale sign of when you're in an actual fractal nature of the curve is when your original consolidation will be tipped off at or near the equilibrium with another stop rate, which basically again ensues another model, another market maker sell model. So that's a great question. So you don't always have to have this light red box. And again, the reason why I'm even talking about that is because of order pairing, right? And I mentioned that if you have a fractal nature on the side of the curve, that means that the way that you look at order pairing is going to be different than the way that if you didn't have that. So let's talk about it now. So basically, let's say hypothetically you don't have your fractal nature, right? Let's say you have one stop rate over here. Let's say they start to get jiggy with it. And if you haven't done what I'm doing right now, this is the whole portion of you guys to figure out, be like, Josh, if you had the controller, what are you painting? This is exactly what I'm painting. Shout out to Keklik. We have a meeting soon, so that means that I gotta speed it up. All right, speed it up. Sorry, I just had to. This, again, like this. All right, anyways. Bottom line is, much love to. We gotta keep it interesting, right? So the whole portion of it is that I'm gonna be watching to see where the stop rates occur. If they don't occur here, then I want to see, are they occurring here in the premium end of the range, or are they occurring at the equilibrium of the range? That's going to give me my second tell sign of what I'm going to be watching for. Over here, once we hit in stage 2 redistribution, we mentioned this last time, it's like I don't necessarily always want to see stop rates by any measure once we hit around 75%. It's also ICT terms, it's not Josh, so this is just logic that ICT's explained, right? So it's the moment that there is, I need to be on high alert, because this is where they can get jiggy. Where with, I say, like shake and bake Ricky Bobby, this is where the shake and bake Ricky Bobby happens before the smart money reversal. And then every single person starts going and says, hey, listen, I'm confused. They start longing, they start shorting, they give all this liquidity to the fucking market makers, excuse my language, at the bottom, and then price just expands. So let's dive more into it as we are now. So over here, we have the stop rate. And then we have basically the breaker here that happens at or near equilibrium and or in premium. So this right here is going to be very, very important to me for order pairing. So when I say order pairing, all I'm doing is basically taking orders that are from the left side of the curve, which is here for the sell side of the curve, to a market maker buy model, and extending that out in time. And I'll show you what that means and what that looks like very, very soon. But what we got to do is understand the engineering, right? So I want to be watching for where stop rates happen, because I know with a great deal of certainty that if we already rated the liquidity that's below here, and we've already rated liquidity above here, that means that they paired their orders here and they want to distribute their orders here. So that means that once we get to the other side of the curve, these are the orders I want to be paying attention to. Drop a 1 if that makes sense. So that means, basically again, when you say, Josh, which ranges am I looking for order pairing? Where am I dragging out in time? Where do I start from? It's literally 2 words, a stop run. Does everybody understand that? Stop runs are going to show you where orders have already been taken and where they're going to want to distribute them. So basically what we're going to do now is find when you have stop rates, and you're going to look to just extend that out in time. If you have stop rates, you're going to look to extend that out in time. This is the easiest. This is what you should be looking for as a general rule of thumb, okay? So when we have a stop rate, we're going to be watching the leg from the high, the leg down to the low, which everyone's going to be like, oh, you're just drawing a bullish breaker? Sure. This range in price is where order pairing is going to occur. That means here, this leg right here, this is where, and again, look at that. This is, I didn't even draw it intentionally like that. This is just the nature of how your brain starts to think over time. I literally promise you I did not want it to just stop there perfectly, but it's just the point. It's like the stop raid from here down to the low, that's where order pairing is going to occur. So you guys are going to be like, Josh, I'm drawing a market maker sell model. Now my order pairing range is going to be freaking massive. Let's say it's 300 NASDAQ points. What do? This is where we start to have fun. So, anybody that's still with us that has a question before we dive in to understand why these yellow zones are being extended out, the answer is I'm taking the leg that has the stop rate. It is literally that simple. From whatever the sell side of the curve is, I'm taking the leg for the stop rate. Drop a 1 if that makes sense. If your brain hurts, I love you to death, so did mine. There's a lot of experiences being said right here. When you say, what's the stop rate? The market maker models just happen over and over and over again. And the stop rate, when you're saying, hey, listen, what's the, maybe, let me back up. I may have misinterpreted your question. Are you talking about a stop rate, or you're talking about the rate of which you're getting stopped? Because I don't want to assume anything here. Love you, Raphael. All right, so you're saying the yellow area, just again to go over it, is a stop rate. So this is the stop rate here from this high, this black line. So any highs, any stops that were trailed here, when they get rated and they come back below with a nice reversal signature, ICT 2022, whatever you want to do, IFEG, breaker, unicorn, whatever you want to see, that happens here. So that means the same thing happens right here, which is the stop rate. Does that answer your question to why I took these ranges? And I'll make these a little bit more apparent so you can see them. It's going to drive me nuts that I didn't look at the color and see if they're darker or not, but it is what it is. All right. So now we just talked about it and basically mentioned that we don't know how large these ranges are going to be because it depends on the buy model or the sell model that you're engaging. For this example, we're just talking about a buy model. So inside of this leg right here, what do you guys think I want to be locating or be monitoring once the curve shifts? If anybody's not familiar, you see I just drew a vertical line right here and it's dotted, right? This is basically the curve shift. Again, this is where you're going to see where sell side basically disengages and buy side engages. So let's try to see if we can be more interactive and say, hey, listen, inside of these yellow ranges right here, what other signatures do I want to be looking at? So Abdul, all you did is drew a similar, again, I'm taking from what I'm looking at here is the leg that rated the liquidity. So in this example that you're showing here, this is the leg that took the liquidity. So all of these candles, that's what I personally would be extending out in time to. Hopefully that was beneficial. And it's not an invitation for everyone to send me their charts. Again, just a quick example just to show you. Hopefully that was helpful. So there's a lot of people that basically just put it in the chat, and I appreciate them saying this is obviously very, very important. This is awesome that you guys are saying this. Inside of these legs, what do I want to be monitoring? What type of signatures? I want to be watching for fair value gaps. Why am I going to be wanting to see fair value gaps here? Someone want to tell me? Why a fair value gap? Displacement. See them disrespected. Those are good. Absolutely. So there's no right or wrong answer here. So it's exactly what you guys just envision on your own, right? So what I'm monitoring to do is any fair value gaps that are in this range. How many times are you guys going to see a fair value gap that encompasses the entire stop run raid, right? So like just think about that logically, right? So automatically, if I can say this, then all of a sudden where this yellow is, all it does is goes to this. Drop a 2 if that's confusing. All I did is refine the ranges to say that I want to see the inefficiencies within the stop run raid now instead of the actual full leg. Doesn't look like I don't see any 2s in the chat. So all that means now is that the moment that I have the fair value gaps that are here, once they're displaced through and they start accumulating near them, they're going to start to give me a lot more signatures that I'm going to start to trust that the order pairing has already been established, engaged, and they want to make a turn. So what do I mean by that? Well, let's say we have a fair value gap here. Fair value gap got respected. Maybe one last time they built up trend line liquidity. They want to do a stop rate. Anybody that basically was selling short got stopped out. Anybody that chased price lower from there, this is the Ricky Bobby. So what I'm about to tell you guys right now is very, very important. And again, if you have not written this down, you got to see what I'm talking about within your own charts. You're going to notice that inside of these stop rate legs from here to here, they're going to contain some fair value gaps. One of the signatures that I like to look for, and again, please understand what I'm trying to say, something that I personally like to look for, that doesn't mean that you guys do the same thing, I look for, is to monitor if bodies or how a time-based close originates at or above these previous areas, redistribution and or imbalance. So all I'm saying is that the moment that they break these, you will never catch me going long or short immediately. That's just not how I trade. So the point is that the moment that they're displacing and they're showing me their intentions from here, I want to ask myself, am I noticing structure, any SMT that's going to happen below this or above this? Am I saying anything of a change of state of delivery? This is where you want to see the T-Trades model also to plan out. A nice C2 here. Like I would love to see that. So everything that I'm trying to illustrate to you is when you want to see bullish order flow signatures, it's at this point. The moment they either break this, respect the EQ, or here. And this is where, coincidentally, this is why this is the gray area. Okay? Because this is the gray area where I personally watch price. Okay? And this is where your own experience is going to dictate and also show you. It's like, okay, well, did we raid this? Is there SMT on the low? We didn't raid this. Do I see structure? Am I higher time frame liquidity here? Et cetera, et cetera. So it's like, this is where I start weighing all my confluences. But it's like, why would I go there and say, hey, listen, here's my whole game plan, unless I literally see this instance right here? Until I see this point set up from every redistribution and different side of the curve, then I know that me reading price here, it's going to quote unquote like feel true. I don't know how else to say this. Whenever you looked at price, I know anybody that's been trading for a decent amount of time can also say this. There's a time where you just look in the markets and you're like, I'm in my flow state. I know exactly what price is doing. I see the curvature. I see basically what's going on. And it's like, this is the point right here, which again, I'm really just trying to hammer home to tell you guys, be like, if you don't take away anything else, you should just recognize that this is what everybody and their mothers wants to be in on a trade for. And if they don't want to do that, guess what they want to do? They want to be in this whole leg that ends up going to here, well, their stop minimum here, here, or at this low, and or start to add their position right here. So it's like, the sooner you can understand where your personality fits inside of each of those stages is when you can start to understand that the tools and the things that you look for are going to actually make full sense, right? So that's where we are. So once we talk about the order pairing, again, because we're going back to that because we haven't exhausted that, the stop rate leg, the fair value gaps, watching the signatures and price once they close above it and or return below it. If I see, again, this whole structure and they're not displacing below here with a huge repricing and they just go back above right here, that's a huge telltale sign, right? And I want to be paying attention to that. So I'll just highlight again where I specifically want to be paying attention, right? Here and here. This is where I pay attention. Why do I pay attention here? Because I know they're shaking and baking. Ricky Bobby, this is where offset accumulation starts to kick in. And I already know that the moment offset accumulation kicks in, that all these stop losses are hotter than anyone on a summer day. Which basically means, again, is that if you're not in a position where you're heavily leveraged and you're actually positioned accordingly, then it doesn't matter where you enter. Think about what I'm about to say right here. Don't take it out of context. But it does not matter where you enter from here to here if you know your draw is up here. And JCap talks about this all the time. Everyone's trying to hunt the best entry or get in the best thing, but in reality, all you need is your draw. And that's why the market maker models, they help you with the draw because you understand overlapping consolidations, you understand where order pairing basically occurs at previous redistribution, and if they stop at the balanced price range of a previous original consolidation, you're not looking to go long here. So here, and again, for anybody paying attention, this leg that's lower than this is where everyone wants to get positioned inside of the breaker anyways. Am I wrong? So it's like the moment this gets broken here, a lot of breaker people are entering here. The moment anyone breaks this, order block people are getting here. Rejection block people are getting here. So what I'm about to discuss right here is very, very important. You don't take it out of context, but basically high frequency trading algorithms and institutions and people that have larger money in pockets than everybody else in here combined times multiples, all they're doing is putting something called a TWAP, which is a time weighted average price, to basically say that from the point of this right here to the point of the liquidity engage, I'm just going to start buying. And that's literally what the books do. And they say, hey, listen, I'm going to offer price here. I'm going to sell a little bit and or buy a little bit here. Sell a little bit, buy over here. And then the moment that all this, I already know I'm in discount, so I just buy over time. And this is where they just load up the ammo. And you can't do this if you're a retail trader. So don't try to do this. You just have to understand what's going on in the semantics of price, right? So when they're buying here, they already know they're getting out here, specifically at the rejection block for a small retracement, here, and here. So look at what their orders do now. So if you haven't seen a commercial hedging profile, that's pretty much what we're discussing right here. They're just basically saying, if I were to just illustrate a box, right, that's here, and it's honestly probably better as a line, you see this would probably be around an equilibrium price of where they can basically start to buy, right? And when I say commercial hedging, that means that they're basically getting in on the sell side of the curve before the curve is already materialized, right? So let's say their average for buy number 1 is here, their average for buy number 2 is here, their average for buy number 3 is going to be at or below this price. So that means that by default, if you were to basically take all of these, right, and I just take the midpoint of this, the midpoint of this is basically as long as that's below the dealing range EQ, the bank's made money. And that should be very insightful to a lot of people. So when you understand this, when they're offering price lower, they're just watching liquidity to be engaged. And they'll just buy every swing low, they'll sell every swing high depending on the curve. But your job is to just watch basically the order pairing and what they tip their hands, because when they start buying, let's say they want to buy a little bit early, that's what's causing a little bit of this, right? And that's what's causing a little bit of this. They're getting in a little bit, and guess what? They start to add more, and that's how the book goes, right? So when we talk about order pairing, it's very important that you guys understand what the commercials are doing, because if you don't understand what the commercials are doing, then you can't really understand order pairing at its finest, right? Because the commercials are getting long on the sell side of the curve, and they're distributing their long on the buy side of the curve. Retail traders want to wait for the curve to basically initiate, which is here, the curve shift, and then get in on either a low risk buy opportunity here, a stage 1 here, or a stage 2 here. Or if they want to engage with the sell side of the curve with the commercials, then all they have to do is wait for the stop rates, because they know that the commercials are going to create the stop rates from their sheer buying on the sell side of the curve. Hopefully this is helpful to you guys, and I'm not just talking out loud. So can anybody give me some sort of feedback and or what's being said right here, aside from everybody else that's also been active in the chat? There's been 6 to 8 people that have been very active, and I appreciate you guys a ton. You guys have been helping drive the entire conversation, and it really means a lot to me. So, well, some other people are giving some thumbs up and saying good words, so that's awesome. I just want to make sure that we're all following, because again, I shut out a meeting 20 minutes ago, and I'm sure Keklig is wondering why I haven't responded to his DMs, but I love him. So, all right. So we just talked about how commercials, basically, it's absolutely 100% a lot to take in. So if anybody's saying they 100% fully get it, I'd probably question it, because it took me years and years and years to understand all this information, to even be on right here to talk to you guys in an hour long based off of what I'm saying right now. There's so much experience and videos and watch time and things that go into basically what I'm describing right now, and screen time, that it has to be over 5,000 hours at this point. So awesome. Looks like all good words. So everybody can understand again the way that I view order pairing: stop rate, looking at the fair value gaps inside this leg, failure to displace SMT below or at these places, and then basically fractalized market maker buy models or sell models that are above or below basically the fair value gaps that quote unquote everyone wants to call inversion, but they're just basically reaccumulating in previous areas of redistribution. So Raphael, we'll get in, brother. We'll get into that. We'll get into this. All right, so order pairing. As a small review, let's just take this example right here and just talk about it. Fractal consolidation, guess what? Stop rate. Guess what? You can choose whatever fair value gap you want. You can choose whatever type of swing high or low. If I'm being ultra mechanical, the moment that offset accumulation is broken, this is the highest high. That's not in the redistribution. This right here is the first high on a swing high for a basis. Excuse me, of a lower high and a lower high to the right. So that means that this leg that ran the stops, this is where I want to be watching. For everybody that's paying attention, don't blink. Guess what? This right here, fair value gap. And what does ICT tell us? What is this? Volume imbalance. Was that hard to find the order pairing range? Drop a 1 if you're confused. So literally all we did is watch for a swing high on this curve. This was the swing high. This was the leg. And instead of me drawing the orange box from here to here and extending this out here, guess what we did? We just found the imbalance, which is here. And then there's a volume imbalance here. So I'm just using this as a consecutive. And we go right here. Would you look at that? Is there any questions based off of what anybody sees right here? Does anybody think that I'm cherry picking right now? Because this is very mechanical. I will happily go through more, right? So look, over here, inside of this, there's swing high here, right? This right here is the leg. Where's my imbalances? Here and here. Is that difficult? So literally the only thing I'm looking at is this. So when price goes over here, and look, we talked about this last time. Watch your up close candles. All of this, we're gonna walk price again. We did this last time, but I think it's very beneficial. Everybody sees the way I'm looking at order flow. So it's like if you can draw consecutive candles and they're not closing above, then guess what? You're also monitoring order flow. This point right here is the first time they close over 50% from a really series of up close candles. Does that make sense right now? Does anybody see this? Look, up close candle. But you can see that this is literally the first time. This is the first time right here that 50% gets broken as well as here. So does everybody see this logically? So I know there's a lot of boxes on the chart. I can take off this and let's put this back. Does everybody understand how I'm walking order flow here? When I say walking order flow, this is what I look at. So this point right here, and again, look at this 50% respect to that. It's freaking beautiful in the propulsion block. Those are the signatures. Again, signatures, write that down. Propulsion block, 50%, and then must produce a fair value gap after. That's gorgeous. So delete. Do we close over 50%? No. Delete. Close over 50%? Nope. Delete. Close over 50%? Nope. Close over? Nope. This is the propulsion inside of this that produced the new low. This is the first time. It's coincidental that it also happens inside of your fair value gap, inside of your order pairing. So same thing, run lower. This is where we go in and say rejection block. All these lows, right? Why am I not using this close? We talked about this previously. This is the lowest down close. So that means that after, listen carefully, after we break order flow, I want to see how these respond. Anybody that's listening in the chat, did I say before or after? Because that's so important. After you see order flow break, what do they do on high resistance lows, right? And anybody that laughed along with me, I appreciate you guys, but at least you'll remember it. So look, order pairing, we talked about how they want to reaccumulate here. I don't even want to go into that right now, but again, then we could also start going. Move this over. Why am I taking this and not also taking what we talked about here? So this is originally what I had marked out. Now, why am I deciding to choose this gray area? And this dotted line was just for illustrative purposes and driving me crazy. Right. Why is this fair value gap important? You're about to go through a full leap in the light bulb moment right now. Alex is very close, actually. So what you're going to look at is basically from the high to the low of the current dealing range, the moment you have identified there's some sort of shift, right? The 25% mark is where you're going to also understand that you want to start to see the signatures happen for a stop rate. We're not, if Tu was on this call right now, he'd be like, Josh, you better not, dude. All right. So the point being right here, though, is that within this lower portion right here is when you want to see an opportunity for order pairing to happen from the lowest leg. I love you guys, right? Or else I wouldn't really be doing this. I really mean it. This right here is the fair value gap that's pretty much in the last area of discount from the previous area of redistribution before the leg lower. So really what you're going to be seeing here is that the leg that creates the smart money reversal, see this high? These legs right here are very different. And I'll explain why. This leg is meant to produce more order pairing from the lows than it is really from any other arrays. Why is that? Is because where we started the entire conversation. Premium to discount array matrix. So that means that basically from here, if there's any type of fair value gaps or let's say other arrays, I don't really like to use them. I want to use the rejection blocks once we get over here. Once we get closer to here in the last point of this, that's when I'm going to start qualifying when I start to see more of these imbalances. Because of the sheer nature of how you guys see the PDR matrix form, right? This is where I want to see the smart money reversal with liquidity. This is where I want to see rejection blocks. Rejection blocks should be below the change of state delivery, which it is. And I feel like I'm calibrated now. So really what I said is very, very important. Is basically finding the last imbalances that are in the leg from discount, which is basically the high and the low of wherever you were. You can use this one too. Anyone's trying to say that matters. That's not what matters. This right here, when we get into this portion right here, this is when I want to see basically change state delivery plus rejection block confirmation. Once we start going above that, this is when I start to use more arrays. I'm using these imbalances to tell me when the turning points of the reaccumulation should be happening. Are we going to close above this and just expand sometimes? Absolutely. But when they set them up, this is literally prime engineering to the T, especially given the fact that we saw that the EQ of that was pretty much right on point. So for everybody that's lost right now, which I know there are definitely some people, we're going to do a small review and say it in very simple terms. High to low, 25%. I want to see order block and rejection block. Above this is when I'm going to start to favor more of the imbalances that are on the sell side of the curve, either buy side or sell side. Here, I don't necessarily love them because then they get a little bit more choppy. So we talked about a lot, but I want to just do one more thing because I'm still not necessarily suffice in what I feel. Fractal consolidation, break, order block originate at the EQ, propulsion block, is there a fair value gap? Yes. Breaker, do they return to it? Yes. Mitigation block, do they return to it? Yes. 50%. Rejection block, higher high is here. They don't reach that. Bearish order block, propulsion, fair value gap, liquidity, void, imbalance, lower. 50% is here. What did we just say that we wanted to talk about and see? Is anybody paying attention? Is what I just did right here any different from what you just saw right here? Rate choice here, showing me where I gotta be finding my imbalance here. Bang. Adam, you're going to need 500,000 examples. Just keep finding market maker sell models, toss this indicator on your chart, and literally watch where original consolidations form and find the patterns. Be comfortable in what stage that you like yourself to be originating towards. Maybe you want to be up here. Maybe you want this one. Maybe you don't even like the sell side. Maybe you just want the buy side. I don't know. For the other 70 people that have not spoken, or let's say 65 people with a meaningful or let's say question or anything that's not a 1 or a 2, please say something, because I know what we are looking at right now. I know where people can be interpreting, let's say, some questions, and I want to ensure that everybody is on the same page to the finest degree before we even move forward, because I'm already much further on time and it's already an hour and a half recording. Yes. This is absolutely not simple stuff to understand. By no measure, by no means, am I saying what is being discussed right here is easy. But when you start to understand your signatures and what you're going to look for in price, it'll start to be a little bit more clear. questions for the fractal consolidations, what your settings to be for the 5-minute, but are you basically asking me if you're on the 5-minute time frame, or if you're, when would I have 5-minute fractal consolidations? So basically, again, if I'm on a 15-second, I'm on a 3-minute here. Again, this is where you guys are going to be like, Josh, you're changing your settings, this or that. Depending on the speed of price, right now 3 minutes is very in tune the way that I see it. But it's like if you're on a 5-minute, your time and when you take trades is going to be different. So 15-minute, 30-minute, 1 hour. Just have to basically see what works to your preference. Cozy, shout out to you. I always see you in here participating, engaging. I appreciate you. So because I told you again, I'm not necessarily fully satisfied. I have a little bit hard time doing that sometimes, but that's just human nature, my flaw, right? So I'm here to share that and explain to you why. So remember we just explained the fact that I want to see a fair value gap, and once I see failure to displace higher or lower, that's going to give me some signatures in price. Well, what do you guys call this? Does this look like it's displacing higher? To me it doesn't. The moment I see this, oh no. What about this? So I'm going to give a shout out to someone that's asked me about this before, which I want them to find their own light bulb moment. But what do you see here? What do you see here? The username I'm talking to starts with an F. So anybody that recently DM'd me, which is not an invitation to DM me, please do not do that. I have literally way too many. I don't want to invite that. But someone by the name starting with the letter F asked me recently about what I'm about to show you. So let's have some fun. Well, there's something called a correlated analysis study. And when you see it, you're like, oh, makes sense, right? Take a look at this. See this high and this high? Everyone's going to be like, Josh, you're not looking at it right. And you guys are going to be like, dang. Let's zoom in. I can already hear everyone's like, this maniac's on a 15-second chart, zooming all the way in. How do you expect me to see all this? But point being is that this high right here is very important to me. This high is very important to me. And this high is very important to me. And this candle, when do they start? Anybody tell me the time right here? Much love, Alex. Hope you have a wonderful rest of your day. Going once, going twice. What's significant about this? You have a 15-minute candle interval, right? So, remember I talked to you about how we're going to get to the fractal nature of price? You guys are about to be like, oh my goodness. Ready? Watch this. Give a special shout out to FX for Living right here, because he also has a wonderful graphic that you can find on his Twitter. I'm pretty sure on his highlights. He's posted about it hundreds of thousands of times, but basically we're just going to go into it and we're going to talk about it real quick. So basically, this right here, that's going to drive me crazy. This right here, let's say, is a bearish candle. All right, so this is a bearish candle, right? So let's say now this is the 15-minute. Anybody that likes math, literally or not literally, how many other candles are inside of this candle? So now we go over there and we're like, well, that makes sense. Now I have, call it 3 5-minute candles. And then you do the same thing to say, hey, listen, what do I do? Now I have, just call it like this, delete. This is again a pretty, I'm not going to say it for lack of a better word, but it's pretty shitty example of my drawings, but you're going to get the point. So basically this 15-minute candle, this is the hierarchy that I see. And you can go further down, right? But it's like within one 15-minute candle, you got 3 5-minute candles, and then you got also 15 1-minute candles. You could also say that you have 5 3-minute candles, right? So shout out to you, FX for Living, talking about the fractal nature of price. Gave a shout out to you based off of the original inspiration of when I saw this drawing. And if you have the link to your Twitter, I would please ask you to share it, because it's probably going to be much easier than me explain it like this. But long story short, I think you know the screenshot that I'm referring to, or the Twitter, but long story short, there's a larger, higher time frame candle, and you can divide that into smaller subset candles. So basically, when I'm looking for an hourly rotation, because that's typically what I like to trade, because that's where market maker models happen, right? Within that hourly rotation, this is where you typically see Josh talk about macros. And then typically when you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever that was painful for someone, I already lost count. here or here is when you're going to already start to have most of this already set. So that means that when I'm looking at price and candle higher time frame ones are about to close and or open, I'm looking at the lower time frame structure and what that's telling me to the higher time frame candle. There you go. I'm going to exactly. Shout out to FX for a living. This is basically his depiction, and it's going to save me great deals of time. So this is the beauty right here. And he did it with a higher time frame so you could see it. But the moment you understand this, now that you have the framework and the way that you basically want to engage in price, we talked about basically this, and we talked about this, right? So if you already know that this is your framework, and this is the framework, then that all that means is basically saying now is that when am I going to basically see or here or here or here or here. So when you guys understand this, all this is just a higher time frame swing. And that's where I give tremendous amount of credit to also T-Trades, because he couldn't be more right by saying that literally every single price move starts with a swing. So with understanding all of that, which I know we got a bunch of stuff on here now. When this 15-minute candle opens and it goes higher, then it goes lower, and it literally produces the change of state delivery from an order block and or from the rejection block from a higher high, which again, for anybody paying attention, you cannot improve, and I love ICT when he says this, you cannot improve on perfection. Higher high from the local swing, this is literally where it is. You want to use this, that's fine, you get tagged in over here. That is literally perfect. So when we say that we're looking at these areas, and how I even got to this discussion is that I want to monitor signatures of order flow signatures once they start closing back above or below these fair value gaps. And as it relates to time, I'm looking at the rotation of other assets, and do they produce a change of state delivery? Do they show me any gaps? Do they show me any kind of SMT? And specifically through the bodies. So it's like, that's what I'm looking for at each of these different stages when they're about to reaccumulate or redistribute. So let's go back over here and see this right here. And look at this. So it's like, this is all based off of a factor of time. Look right here, 30-minute. So they've already now stated that the moment the 30-minute candle and the 15-minute candle close, are they closing above or below this? So again, this is where we can get a little bit confusing, but it's also just the higher level of things that you guys asked me for. But it's like, when you talk about order pairing and talk about time times 2, that's where I'm also looking at my correlated timings and looking at correlated assets at those intervals at specific locations where they have the buy side and the sell side of the curve basically tipping their hand. So we just went down a rabbit hole about how price is also engineered, because look, 12 o'clock is coincidentally right here. 15 minutes delivered, breaks down, 15-minute retracement, ends here. 75%, price expands, 50%, they close through. Any discount or raise, personally wouldn't have been able to get in on this, for my own opinion. Here, this came a little bit deeper than what I've liked, because if I see one type of order block here, it's either going to get the stop run or it's going to hold this order block. And for the best things that I personally like seeing when they're aggressive like this, I just want to see this order block hold. So I probably would have been not taking this entry if this basically held. The moment we close back above here, we're already kind of too far into the liquidity, so that's not my favorable entry. So I would have just missed this buy side of the run, waiting for stage 1, unless I saw this signature. So it's like, these are the things that, again, I wish someone honestly just told me this when I was also coming first and seeing this. The turning points are literally going to happen. I'm showing you where the turning points are going to happen. I'm engineering the price swing to show you that these are the areas where SMT and signatures based off of time are going to develop. I don't know how much more I can really ask and tell you guys. So it's like, once we're here, we understand order pairing, time, fractal consolidation, deviations, maybe is another discussion, and overlap we talked about, shake and bake we talked about, macros we just talked about, SMT we just talked about, OHLC as it relates to the 15-minute candle is literally right here. And the true and fake change of state delivery, I like to qualify this by basically, again, understanding my dealing range and where I am in proximity to each of these quarters. That's pretty much it. I've been going on for an hour and 42 minutes on the recording, and even longer than that when we first started. I could probably talk for another 4 hours, but I have to also get up and enjoy the rest of my day, as well as respond to some people that I have not responded to as of yet.